It is that time of the day, yet again, to go over, you guessed it, all of your Tesla stock breaking news today. Tesla is up 2.3% at the time of recording this video. Why? Well, I think today precisely proves what I've been saying is correct all along. It's obvious to see today. I've been talking about this phenomena where we don't have a lot of money going into our markets. So while you were seeing Nvidia, SMCI, these AI stocks rising, Tesla falling, even Apple and Google, your quote unquote AI losers going down, Nvidia and these other stocks going up, we're not seeing inflows into our markets. So where are the hundreds of billions of dollars of market cap value that is being added to Nvidia coming from? It's coming from Tesla, it's coming from Apple, it's coming from small and mid cap stocks. Well, hey, Nvidia is down 1.4% today. SMCI is down almost 5%. Your AI stocks are taking a breather. Apple's up 1.14%. Tesla up 2.3%. It is no coincidence. This leads me to believe that tomorrow's ARM lockup expiration with SoftBank, if that goes as I expect and SoftBank sells a large chunk of their position, and ARM stock falls, bringing down Nvidia and these other AI stocks, well, that could actually be a very big catalyst for Tesla. We will talk about that a little bit more throughout this video, with a main focus on that in the next video coming out at 8 p.m. Eastern Standard Time tonight. You definitely don't want to miss it. I will give you my estimates for CPI, which also comes out tomorrow in that video at 8 p.m. tonight. Now, beyond this rotation in the markets, if you will, AI stocks down, Tesla, Apple up, you're not really getting too much news specifically that would justify Tesla being up over 2%. If there was anything that does justify Tesla being up 2% today, I would say it's probably Canaccord Genuity talking about this overselling of Tesla. And I will go ahead and play this clip for you because I think you need to hear it. It is a little on the long side. It's like 5 or 6 minutes long. If you don't want to listen, skip past it and we'll go over all of your Tesla stock breaking news today. But I think this is significant because it's finally someone else besides a Cathie Woods, if you will, that is talking positive on Tesla. Even recently, Adam Jonas, the guy on Wall Street that has the highest price target on Tesla stock, said 2024 Tesla may actually be unprofitable or close to it, with free cash flow of only $84 million. Even Adam Jonas has recently capitulated to the pressure. So this is really a breath of fresh air for a lot of Tesla stock investors.
Well, first let's address the reason why it's lagged. And it's pretty simple. The numbers have come down. I mean, if you look at the earnings revisions for the last 12 plus months, they've been terrible. I mean, I think we started for 2023 somewhere early in that year on $6, and it came all the way down to $3. And I think we're at a period of time right now where the worries likely exceed the reality. And we had some numbers last week come out of China that weren't very good, but those people didn't take into account that the new year has been pushed into February. Also, some stuff that happened in Germany. Their plant came down for about a week because of arson, a week plus. And in the U.S., people are worried about the production of their new Model 3. And we think that the best way to kind of gauge, for the most part, what's happening with Tesla, particularly in the U.S., is to look at their prices. And they've been pretty stable in the U.S. over the last few months. So, there's a lot of wood to chop still in the quarter, but in the near term, we think that we may have overcorrected here to the downside.
They talked on their most recent earnings call, George, about the spending and some of the record R&D that they had done during 2023, which now places a lot of emphasis on bringing that to fruition in 2024 and years following now. How much of that spending do you anticipate will lean further towards the side of this artificial intelligence narrative that has started to prevail with Tesla, even though we've seen some early slippage this year, at least in the price action?
Look, we're in a little bit of a pause period right now for the stock. In the near term wiggles, we think we've overcorrected, but for the stock to really get its legs, we have to have three things happen. First, the next generation vehicle has to start to ramp, or people have to gain confidence that it's going to ramp and be successful. Second, their margins need to go up. And the most likely lever for that happening is the increase of FSD, full self-driving penetration, which leverages the AI that they've built, in addition to volumes starting to pick back up. And third, it's continuation in growth, really good growth in their energy storage business. So when you talk about leveraging this R&D that they've spent a lot on, it's two real products that come out of that, the big spending. It's number one, that next generation vehicle, which we think should start production in the second half of 2025, and continued FSD penetration. Now, we think that the FSD offering from the company at $12,000 currently is a little too rich, particularly relative to the cost of the vehicle. We think the company should cut the price of that FSD to really increase penetration and really have the margins start to turn in. If you think about it, that offering is about 100% gross margin, very, very high gross margin because it's a software upgrade.
George, we have seen, though, the price wars play out. Obviously, Tesla, far from the only automaker, one of many, I should say, that has been forced to lower the prices, obviously putting pressures on margins, very similar to what you were just saying. How do you see that, more broadly speaking, beyond Tesla, shaking out just a bit, and that pressure to the downside in terms of boosting demand? How much longer are they going to be forced to slash prices in order to drive the demand that we simply have not seen?
Well, look, there's been a pause, like I said, recently, particularly in the US. The price declines that we saw for the most part in 2023 is sort of ebbed right now, which for us is indication that maybe things aren't that bad. And what the company did strategically by being that aggressive is, first of all, they get to sell more vehicles, right? Because interest rates went up and most people finance the purchase of their vehicles. So that meant that the prices of vehicles went up artificially. But second, it put a lot of their competitors on their back legs. I mean, margins got a lot worse for some of the pure play EV competitors. Sales got a lot worse for them. And even for the traditional OEMs that try to compete against Tesla, their margins got significantly worse because they couldn't compete with Tesla on price. So what we saw is, longer term, what Tesla did is put a lot of its competition on the back foot, particularly in the United States and Europe.
And so let's talk then about China, because that's one of the larger kind of lingering risks right now for Tesla. Is sentiment shifting so much in the region that there would be a longer term implication for how Tesla is able to operate and sell into China as well?
That's a great question. I mean, look, we see the real competition for Tesla long term. Look, we really like Rivian in the United States and in parts of Europe and other parts of North America. But in China specifically, there's some very, very good OEM competitors, some pure play EV companies. The company has one plant in China right now, able to produce about 950,000 vehicles. And they're running, despite this monthly volatility, they're running full tilt there. And we continue to believe they'll run full tilt in that country. So there's really good competition in China, but we think Tesla can operate that factory at relatively full capacity that leaves them in a good place in that country.
So, George, as we wrap this up, we started this segment talking about the share price being under pressure. We're trading around $179 a share today. What more specifically does that upside look like?
Look, our price target is in the 230s, and we base that on 26 times our 2026 estimates. And we think that's going to happen as volumes start to pick up next year and the year after that, based on increased Cybertruck production and the next generation vehicle. And importantly, we think that the margins will start to get better, particularly as we've seen an abatement in price reductions, at least for now, and costs continue to come down for the company. So, in the near term, we have these wiggles, and we think, like we said, we've overcorrected to the downside in the near term. But, for real outperformance, we need to next generation vehicle or some visibility to that, increased margins based on FSD mostly, and continued growth in their energy storage business. Those three things will really get the stock to get its outperformance legs of old back.
So I obviously agree with a lot of what he says. In terms of the catalyst that will really get Tesla stock moving, right now, yes, the ramp of the next gen vehicle, that's obviously important, but the biggest, most important catalyst is margins improving. That is correct. More profitability from Tesla brings down the valuation, and that's the thing that really matters most right now. I think even guidance on that would be important. Like if Elon and the Tesla team said, if rates go down, we'll raise prices. I think that in and of itself could even boost demand, as people are like, hey, I just want to buy the Tesla. before prices go up, especially if you're a cash buyer. If you're not financing a Tesla, then, well, the sooner the better before prices do go up would be good. Now, I also want to highlight this. I talked about this over this weekend, just briefly. The catalysts that I can see happening in 2024 that are not priced into Tesla stock, the bears are definitely not pricing in any of these catalysts, and the bulls really aren't pricing in any of these catalysts. And take note of what he just said, that the next generation vehicle, they expect that to ramp in the second half of 2025. What if it starts in the first half of 2025? That's also something that could be material for Tesla stock. So here is the list of 10 positive catalysts I think have a better chance than not of coming in 2024. Number 1, better selling of the Model 3 in the US. Number 2, smoother Cybertruck ramp. Number 3, overall halo effect. Number 4, faster than expected Model 2, which I just mentioned. Number 5, Tesla raising prices later in 2024. Or you could add giving us guidance that Tesla will raise prices when rates go lower, because Elon said it very clearly on multiple earnings calls now. It's all about the monthly payment. And then number 6 and number 7, FSD entering Europe, FSD entering China. Catalyst number 7 is Tesla talking positive on AI. Number 8 is number 9 is Tesla providing guidance. If they were to come out next quarter and say, yeah, we have more visibility to what demand's going to look like in 2024, we can confidently say we're going to deliver around 2.2 million deliveries or 2.15 million deliveries. That would be good news at this point. That would be higher than where Wall Street's current expectations are, right at about 2 million deliveries for 2024, which would only imply about 10% growth for 2024. If Tesla could say we're going to be a little bit better than that, that would be great news. Or even giving us 2 million for the delivery forecast. I think that would be good news when some people think Tesla's deliveries could actually be down year over year or just barely higher than last year. So something that could also possibly happen. And then number 10, an Elon comp package with high market cap tiers. If this does happen, that's later in the year. But again, $5 trillion, $10 trillion, even $3 trillion for your market cap tiers. That would be good news because Tesla and Elon smashed the last comp package. Odds are they will do more constructive things for shareholders. Maybe not be so doom and gloom on the earnings call if they're trying to get the stock price higher, right? There's a lot of things Tesla and Elon could do if they wanted the stock to go higher. They haven't, because Elon doesn't have a comp package. That could be one reason. And then also you secure Elon as CEO at Tesla for, till 2030, 2035, 2040 for an extended period of time. And 20 to 25% of Tesla's value, I would say, is tied directly to Elon being the CEO. Now, in your other Tesla stock news today, believe it or not, Deutsche Bank says Tesla's first quarter deliveries and earnings will miss estimates by a wide margin. So let's take a look at this. Let me know what you think about this down below in the comment section. But Deutsche Bank says Tesla's first quarter deliveries and earnings are expected to fall well short of market views, while ongoing challenges could place material downside risk on full year expectations, Deutsche Bank said in a note emailed on Monday. The brokerage cut its quarterly delivery target to 427,000 units from a prior view of 476,000, pointing to a low Model 3 production in the US, a slow Cybertruck ramp up, and weak overall electric vehicle demand. Analysts surveyed by Visible Alpha are modeling deliveries of 479,400 units for the quarter. Deutsche Bank lowered its estimate to 1.96 million vehicles, representing high single-digit growth for the year versus its prior forecast of a mid-teens rise. The Visible Alpha consensus is for 2.08 million deliveries for the year. The EV maker faces limited volume growth and pressure on profitability from price cuts, according to Deutsche Bank analyst Emmanuel Rossner. He rates the company at a buy rating with a $218 price target. He says, quote, "We see pressure on margins and earnings as the company already announced deep price cuts in both China and Europe earlier in the quarter and made further moderate price adjustments in February to incentivize vehicle purchases," Rosner wrote. First quarter margin will likely decline deeper on a sequential basis, with limited room for improvement throughout the year. Exactly what I've been saying, man. I love it. I absolutely love it when analysts come out and make these assumptions. Let me read that again. Quote, with limited room for improvement throughout the year. Margins are just not going to improve at all. Maybe he's correct, but the expectation being that sets you up for some upside surprises later in the year, in my personal opinion. Other changes include a recent arson attack at the Berlin factory that is expected to impact efficiency gains, new labor costs, and the margin dilutive Cybertruck launch, according to Rosner. Let me know what you think about this down below in the comment section. I mean, first quarter might be rough, but that's not what really matters for Tesla stock. Investors are more concerned with what's going to happen than what already happened. And I think that's important to point out. Now, again, Tesla stock is up 2.3% today. So far on the day today from hedge funds and institutions, you have seen 479 orders in the options market, totaling $156.35 million with a positive order value of 51%. These numbers are going to change a lot by the time that 8 p.m. video comes out. So stay tuned for that. I think with the stock up 2.3%, you're likely going to get a much higher positive order value. Definitely something we want to watch heading into tomorrow. And yet again today, there's a lot of demand to short Tesla. Anytime Tesla is really green or red, lately there's been a lot of demand to short Tesla with cost to borrow fees around 10%. That's honestly insane. If you're shorting Tesla today, you're paying 10% per year to short Tesla. That means you would need to see Tesla fall another 10%. When the stock's already down 30% year to date, that's betting that Tesla will fall over 40% year to date just to break even. That's insane. That's very pessimistic. The bears are definitely showing in these cost of borrow fees, that's for sure. Short interest percentage of free float at 3.21% with $15.55 billion currently in short positions in Tesla. This number has fallen a lot because the share price has fallen a lot as well, whereas the shorts continue to add to their short positions, and you continue to see the short interest percentage actually rising. Over on StockTwits, individuals are feeling a lot more bullish today than they were yesterday on Tesla. Yesterday, sentiment was neutral at 46. Today, sentiment is at 58, which is categorized as bullish. Message volume has also picked up. Yesterday was at 35, which was low. Today's at 46, which is normal. And the participation ratio continues to rise. Yesterday, this was at 56, and now it's at 58. So more people talking about Tesla stock with higher message volume and higher sentiment. That's overall good news for Tesla investors. Cybertruck Google Trends data continues to rise. Well, actually, it's been plateaued since the end of February, but it's plateaued at a high level. So Cybertruck search trend activity is around 29, and you've recently seen this as low as about 16 in the middle of January. And now at 29. So it's been ramping up here. And I've been saying for a while, this is likely not investors searching about the Cybertruck. I think we're past that phase at this point. You know what the Cybertruck is. You know the specs on the Cybertruck. You know what's going on with the Cybertruck. Ever since this spike here, this has likely been organic search trend activity, whether it's from Kim Kardashian posting it on her story, or Justin Bieber taking purchase of one, or the Cybertruck at auto shows, or people even seeing the Cybertruck out on the roads. You're starting to get more, I think, people talking about and looking at the Cybertruck, which could be the start of an indication that we will indeed have a Tesla Cybertruck halo effect, which again is catalyst number 3 on this list that I don't think is priced into Tesla stock. If you take a look at all of your Tesla models, you are seeing a deceleration at least a little bit for the Model Y, going from 33 to 31. The Model 3 decelerating a little bit from 37 to 36. The Model X staying at about 10. Now, there is this argument that people are making, as I just went over from Deutsche Bank, that Model 3 production has been slow. I don't really think we're seeing too much evidence of that. There wasn't drastic changes done to the Model 3, so I question that. And Tesla in the US has raised the price of the Model 3 long range. It's possible that production's a little bit more difficult, going a little slower than expected, but I think demand is a lot stronger than what Wall Street is giving Tesla credit for. I think the Model 3 demand in the US is very strong right now. And just for an example, if Tesla were to come out and say that Model 3 demand in the US is off the charts or something similar to that, I could see Elon saying that specifically on the earnings call, that would be a big upside catalyst as well. Tesla is still running about 3,000 different ads on Google. Again, most of these are short form ads, like ads on, YouTube videos, Google Shorts, even TikTok. I've seen some people talk about Tesla advertising over there, which is probably not a terrible demographic to advertise to in general. Lots of ads in foreign languages like Japan and South Korea, and Tesla starting to advertise the low starting price of the Model Y as well as the Model 3. So I think they're advertising, again, the right things, the wrong area. I don't think we need to advertise on Google. I think we should be advertising on the dang television. And also let me know where you think Tesla should advertise at down below in the comment section. Global inventory numbers for the Tesla lineup shows a slight deceleration today for the Model Y. The Model X continuing to fall a little bit. The Model 3 staying pretty stable at about 1,200 vehicles in inventory, and the Model S even lower than that at about 1,100 vehicles in inventory. It would suggest to me lots of good demand, at least for these three models. The Model Y tends to always have some pretty good demand, so I'm really wondering why the inventory is so much higher. Maybe they're just making more Model Ys. That would make sense, but to get a little bit more clarity on that will be a good thing coming on the earnings call. Here today in After Hours, you will have earnings from Oracle and Asana, as well as Casey's, Vail Resorts, Ocular Therapeutics, LifeMD, Mission, Assertio, Cytomix, and this other company down here, but not too many crazy names. I think Oracle's obviously going to be your biggest one. Tomorrow pre-market, you have some earnings, Workhorse, Kohl's, ADM. These are going to be some of the bigger ones. Tuesday after hours, you have Clover. Wednesday, you have Dollar Tree and pre-market. Wednesday and after hours, you have Centennial One, UiPath, Big Kathy Woodstock there. Thursday pre-market, Dollar General, Dick's Sporting Goods, Futu, Canadian Solar, Build-A-Bear Workshop, among others. Thursday and after hours, that's really your big day for earnings this week. Besides Oracle today and after hours, you have Adobe, Blink, Ulta Beauty, and PagerDuty that will be reporting. Here on X, Tim Does says, throwback to when I used to do this every time I got home. I really missed this feature, Elon Musk. Any updates on progress for vision-only Teslas? And it basically pulled the car into the garage for him. Elon says really cool stuff coming both this month and next. So hinting towards maybe some larger updates coming. We'll have to wait and see. Tesla is now enforcing the no sale clause on the Cybertruck, cancels orders and blacklist owner. They say, quote, moving forward, any future orders placed by you will be canceled without a refund of the $100 reservation or $250 order fee, as official notification has been provided to you regarding this matter, Tesla said in their email. Pretty accurately, Tesla Mars responds to this post and says, F around, find out. Apparently, a man claims Tesla's autopilot possibly saved his life during a seizure. I mean, oh my gosh, this actually brings up something that just happened to me the other day. I did not have autopilot enabled or FSD enabled for that matter. But this freaking truck, dude, literally went over the line, and it had those little like speed bump things to like wake you up or whatever. Went over the line straight at me. I've never seen that before. It was like he was on a mission to go head on at me. I literally had to swerve all the way off the road. But the first thing that I thought of is if everyone had FSD, that wouldn't have happened. Like if I wouldn't have swerved, I would not be making this video right now. So yeah, really long story short, we need FSD out there on the roads a lot more than it is out there today. This is some pretty good news. Tesla's Giga Berlin could be supplied with electricity again from Monday. The power firm in charge of fixing the outage, which began on March 5th, just said. And your treasury yields today are back to about 4.11%, up about 2.5 basis points today. The 10-2-year yield curve inversion is inverted 39 basis points, so it's been inverting more, which is actually good for the bulls. When this goes above the black line, when you actually go positive on the yield curve, that's typically when you're close to, or already in a recession. The percent of stocks today above their 50-day moving average is up 0.44% today. So even though markets are down, you are seeing some stocks breaking above their 50-day moving average, which is a good sign again for the bulls. Now, this may not be a good sign heading into tomorrow's CPI report. TLT, this is the ETF that tracks the 20-year treasury. TLT is selling off. Now, when TLT goes lower, that means treasury yields are rising. So if treasury yields are rising into the end of the day today, that means you're kind of implying CPI could come in a little bit hot tomorrow. The dollar today is up 0.1%. Not great, but you've fallen recently with the dollar, so it's probably not a big deal. What is a very big deal is the move that you have seen with gold recently. Take a look at gold. Gold is seen as really a safe haven asset. When there's problems out there, when there's recessions out there, when there's wars out there, pandemics or anything else, gold tends to do a little bit better and can be to some degree a leading indicator of pain to come in the economy. People that have the most money have the most information, the most connections out there, and they know the most people. Well, if they're fearful, they're going to put their money into gold, right? Gold, treasuries, assets of that nature. Well, gold specifically has been doing some very weird things. Gold has been going higher over the last week or so, last 7-8 trading days, substantially higher. You went from 189 on GLD to 201 recently. GLD's RSI is at 83. Why in the world is gold ripping? That doesn't make a whole lot of sense to me. Now, Tesla stock today, back on a technical basis, is up above this line here that I've been watching, this uptrending line of support. You're back above that. The level you really want to stay above is about 177.70. Tesla stock's at 178.63, so about $1 higher than that. We'll see what happens by the end of the day today. If you don't stay above this line though, then you could be setting yourself up for downside to about 165. If you break under that on the downside, then you set yourself up for, a 150 retest, which it's all going to come down to what happens tomorrow, and I will have that information, my expectations, my predictions in the next video at 8 p.m. tonight. Let me know what you think about this information down below in the comment section. That is going to do it for this video. If you guys want to come hedge out your portfolios, come trade with us live in real time, especially in this very volatile market. I think we're about to experience a lot more volatility. Check out that link down below in the description of this video. I believe we have like 300 members over there or something crazy now. It's starting to grow quite large. We would love to have you as well. Also, check out the X account. It is Michael Tyler over there. Pretty easy to find. Doesn't take a lot of work to go follow that. It's free 99. We share a lot of things that hopefully will help you stay more educated, grow more, learn more, all for free 99. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.